Wow, who knew so many people would be so interested in financial disaster? Good evening and welcome to Politics and Prose. I'm Brad Graham, the co-owner of the bookstore, along with my wife, Lissa Muscatine, who's also here this evening. And thank you. We are very excited to be hosting financial journalist Andrew Ross Sorkin, who's here to talk about his very illuminating new book, 1929, The Inside Story of the Greatest Crash in Wall Street History and How It Shattered a Nation. Andrew, of course, has been reporting about money and markets for more than 2.5 decades, and I'm sure many of you are familiar with his often revealing and insightful columns in the New York Times, which he joined full-time in 1999, and 2 years later began the Times' daily financial newsletter, Dealbook. An inveterate multitasker, Andrew also, since 2011, has been co-anchoring CNBC's signature morning program, Squawk Box, and he previously wrote a best-selling book, Too Big to Fail, about the financial crisis of 2008, then helped make the HBO movie based on it. Plus, he co-created the Showtime series, Billions. Now, Andrew's book about the 2008 crisis got him exploring the even bigger financial disaster of 1929. He knew the broad strokes of that catastrophe, but was curious about the details, the individuals who had roles in what happened and what they did and didn't do. So he set off on what turned out to be an 8-year effort to write a book about the crash, drawing on a trove of historical records that included the papers of various Wall Street titans, an unpublished memoir, and previously undisclosed Federal Reserve Bank of New York deliberations. So why should the rest of us care about a century-old crash? Well, because its ripple effects still shape our society, and as Andrew notes, there are remarkable parallels between that era and today's political and economic climate, with markets now soaring again, political tensions mounting, and greed, corruption, and incompetence very much in evidence. But even apart from its relevance, the story of 1929, as Andrew tells it, is a heck of a work of scholarship and narrative history. Andrew makes clear at the outset that his focus isn't on those who suffered the fallout of the crash, but those who helped set it in motion. His cast of characters is dominated by what he calls the fine gallery of rogues that populated the Wall Street of the 1920s, along with politicians, regulators, and other well-connected types. And he vividly and dramatically recounts how a mix of motives, miscalculations, misdeeds, and misfortune led to the most infamous financial collapse in history. Could it all have been avoided? Well, Andrew's short answer is yes, but for the longer answer, read the book. You'll find it fascinating and also scarily timely. In conversation with Andrew will be one of Washington's most prominent and productive journalists, Mike Allen. Mike has been a journalistic force since starting his days on a couple of papers in Virginia, through his time at the Washington Post, New York Times, and Time Magazine, then as chief political reporter for Politico, and right up to his present role as co-founder of Axios and author of the daily Axios AM and Axios PM newsletters. We're so glad he's here to moderate this evening's discussion. Please join me in welcoming Andrew Ross Sorkin and Mike Allen.
Thank you, Brad, very much. And thank you, Brad and Alyssa for Politics and Prose. It's a great, there you go, great Washington institution. Andrew, this is amazing for people who are watching on the live stream around the world. We have an amazing standing room only crowd. And as we were sitting backstage, Brad and Alyssa said the most surprising thing to them is that there's only one of you. So how do you balance? You have an enviable range of gifts, co-host of Squawk Box. You are an author. You're a co-creator of films. You're a dad. You're a New York Times star. How do you do your thing?
Not well. I don't know. I'm just trying to get by. Honestly.
Well, it seems to be working.
So far, so good. So far, so good. I don't have a great answer for you there, right off the bat. Here we go. That was actually a hard question because I don't know. I'm honestly just trying to do it.
So just pause at the top. Andrew, you're someone that Jim Vandehei, who's my partner in crime at Axios, you're someone that we have long admired. The range of things that you are good at is very impressive and very rare, the real deal. And I feel like we don't tell people that often enough. We admire you.
Thank you.
So let's plunge in 1929. So it's an amazing work of narrative history, but for you, it was a detective story, including a lead character who didn't have a journal or a diary. How did you piece it together?
So this book, and you described a little bit of it earlier, began basically a decade ago. I went on vacation with my wife and downloaded a whole bunch of books on a Kindle, I'm sorry, that I didn't bring hardbacks with me, about 1929. There's some famous, and by the way, great books, and some of you may have read them, including Kenneth Galbraith's great book. Once in Galaconda is a great book. There was a book that was written in the 70s called The Day the Bubble Burst. That was a great book. But for whatever reason, they all felt to me a little bit like they had sort of an armchair quality to them. Galbraith was an economist, and I didn't feel like I'd ever read the book I wanted to read, which was the Den of Thieves version or the Barbarians at the Gate version. I wanted to be in the room with these people to understand what actually happened, what they were thinking, what were the incentives, who are they having affairs with, all of the things that actually, we think about economics and economic cycles and systems, but to me, in the end, it's actually about people. It's about people who make decisions, and sometimes they make good decisions, sometimes they make bad decisions, but it's those decisions that set those cycles in motion. And so all I wanted to do was try to get in the room. So meanwhile, I end up at Harvard University to give a lecture, and I get there early, and I go into the Baker Library, and there's a guy named Thomas Lamont, who's a main character in this book. I know a couple of you already read it, happily. And Thomas Lamont was running J.P. Morgan at the time. And I get into the boxes, and all of a sudden I see that his secretary was keeping transcripts of all of his conversations with Roosevelt and with Hoover, and there are these letters back and forth between everybody, and you can actually see them talking to each other, and you can see everything. It was wild. And I thought to myself, okay, maybe this is how you could tell the story. And I went to the archivist and I explained what I wanted to do. And she said that she had read Too Big to Fail. And she said, that's impossible. You're not going to be able to do that. And I took that as a personal challenge. And the reason was, and she was right, she said at the time that there's not lots of material with this kind of detail out there, and that there's not like 2 or 3 or 4 archives that you could just go mine. And there weren't, and that was sort of the mystery of this whole process. So Charlie Mitchell, who's the main character of this book, has no archive. There are no diaries of Charlie's. And so every time you see Charlie speaking in this book, it comes from, in this case, I ultimately found transcripts and depositions and letters that he sent to other people, and they kept them in their archives. And so it was this sort of very circuitous route to find all of this material, and each time it was just a prayer that I would land on the right thing, and sometimes I did, and sometimes I didn't.
Brad, you, I all started in newspapers, and there's some great evocative quotes from amazing newspapers from back in that time, some of which don't exist. How accurate did you find the first draft of history tends to be?
Oh, goodness. For the most part, actually, I think it was pretty good. The problem was a lot of the press, by the way, back then was being paid off, literally, by folks on Wall Street. I mean, Wall Streeters, including J.P. Morgan, literally had journalists on the payroll. And so there were these sort of unusual articles that you'd read, and you wouldn't be sure what was really happening. But there were some fabulous columnists and little things that I found that never even got attention later on. And I thought to myself, wow, that is actually the real story. The real story was told in some column by some journalist that nobody was focused on, and they got it right. But that the rest of the public actually had gotten it wrong, oddly enough.
So you've been traveling around the country, and by the way, congratulations on the New York Times bestseller list yesterday.
Thank you.
Yesterday you were in Richmond. Tomorrow I believe you're in Boston. Since we're in Washington,
Yes.
What's the learning specifically for Washingtonians, our movers, shakers, our policymakers, our leaders from 1929, both the year and the book?
So the most interesting thing to me about what happened in 1929, I mean, let me just take one step back. Half of the story is told through what's going on Wall Street, and the other half is being told through what happens in Washington. You know, President Hoover got the job on March 4th, 1929. And I only say that because I think everyone has a very negative opinion of President Hoover, for good reason. But the truth is, it would have been very hard to get ahead of this crisis for him. Meaning it would have been very difficult for him to do anything. The only person or people who could have done anything, and I think actually relates to now, oddly enough, is the Federal Reserve. And the Federal Reserve back then effectively sat on its hands because they were worried about political pressure. And the reason I mention political pressure is we are having a debate in America right now about the independence of the Federal Reserve. And a lot of people are worried about the independence of the Federal Reserve in the context of are they going to raise or lower interest rates. I wouldn't worry about that. I'd worry about what would the Federal Reserve do in the context of a crisis. Would they flood the system with money? Would they not? How would they actually do it? Back in 1929, the Federal Reserve was still a new institution. It was born in 1913. And so if you read the diaries of most of these board members, they are scared out of their mind that if they raise interest rates to try to cut off the speculation, and they know that there's a problem and that things could get out of control, but they know that if they do this, they think that they're not just going to get hauled up in front of Congress. They talk about the experiment, this great experiment of the Federal Reserve being eliminated completely. And so one of the reasons that you didn't see them try to cut off things, and I would argue then one of the reasons they didn't do more on the other end either, was because they were worried about the political pressure. Again, not because the president was telling them exactly what to do, but more because they were very cognizant of those pressures. But what's interesting about that is, and the reason I mention it is, you know, here in 2008, when we had our own crisis that everybody here has lived through, one of the things that Ben Bernanke did, Ben Bernanke was a student of this crisis. He did his PhD at Princeton on the Great Depression. He flooded the system with money. He bailed out banks. He did things that were supremely unpopular. People hated him for what he was doing. But he did it because he was independent, and he wasn't worried about the political pressure. So if you start to think about what happens with political pressure, that's what happens. I don't want to say 1929 is what happens, but bad things.
Now, I think it was a conversation with your co-host on Squawk, one of your interviews. I learned from you that there was a nuance to the connection between 1929 and the Great Depression. Did the Great Crash trigger the Great Recession, or what's the most nuanced, accurate way to say it?
So this book is called 1929 and basically runs, by the way, through 1933. To me, the crash, which is only part of this book, is really the first domino that sets it in motion. But it did not have to become the Great Depression. It became the Great Depression because of a series of policy errors, which then you'll see in sort of stark relief, I mean, in great detail. And those policy errors are the Fed not throwing money at the problem, for example, Hoover deciding at this moment that he wanted to raise taxes, great idea, when the economy was faltering. 1930 comes along, and he decides that he needs to make good on his pledge to impose tariffs. So in 1928, when he was trying to beat Al Smith, and one of the ways he thought he needed to beat Al Smith was he needed to get the farmers to vote for him. How did he get the farmers to vote for him? He told them he was going to implement tariffs. So 1930 comes around. He says, I need to continue with the pledge. Every economist in America, just like every economist did 6 months ago, was writing full-page ads in newspapers, and bankers were going down to the White House begging him not to do this, and of course he did it. So there's a whole series of things that took place that I think made things materially worse. And by 1932, we had 25% unemployment in this country, and by 1933, 9,000 banks went out of business.
Fact checker.
Fact checker. That's good.
So we'll call it
Thank
60.
you.
We'll call
Thank
it
you, sir.
7,500. You've talked a lot about the macro parallels between 1929 and now. Your story in the New York Times Magazine last Sunday had the headline 1929 vibes. That's pretty scary.
So I'm not here to scare people or tell you that you should all go buy gold or that we're all going off a cliff tomorrow. I don't think that that's necessarily the case, though. I think that there are vibes. There are things about what's happening today that are similar to then. That doesn't mean that we land in the Great Depression. It could mean that we just land in some kind of major pullback in the stock market. And the things that are somewhat in parallel, tariffs are a sort of a very obvious example, but that's not really the bigger issue. The bigger issue is that we are in a moment now of trying to democratize finance. That was a phrase that was used often in 1929 and the 1920s.
And what are today's examples of that?
Well, I think, if you look at what the Genius Act does, the Genius Act effectively is going to allow private equity, venture capital, crypto, private credit. All of this is now going to be available for retail traders to invest in without the same disclosures that have historically been involved with publicly traded companies. You're going to be seeing a whole bevy of new instruments that the public is going to have access to. It'll be available in your 401ks, so it's going to be in retirement plans. They do not have the same kinds of disclosures. Those are the kinds of disclosures. By the way, I would say disclosure was a huge issue also in 1929. There was no insider trading laws. The SEC didn't exist until 1934. There was no bank capital. There was nothing. By the way, people would say to me, when you were doing research, did you ever look at a prospectus for any of these companies? And I would look at them like, prospectus? There was no prospectus. You'd be lucky if there was a leaflet for these companies. So there was no information. Nobody had any information about what was really happening. But the big thing in the 1920s was this idea that the elites had gotten rich and that there was an enormous amount of inequality. You had a sort of industrialization boom. You had the automobiles, you had radio, you had telecommunications. I mean, by the way, RCA was the NVIDIA of its time. It was like the meme stock of its time. Everyone was so excited about that. And we're living through a very similar moment where we think there's sort of a magic ahead. There's an enormous amount of money being spent on it, an enormous amount of leverage. Leverage is the match that lights the fire in any real financial crisis. And so I think if you start to look at some of those things and just the euphoria that people seem to have, it's a little bit nerve-wracking.
All right, how about the human parallel? So you said that one of your main characters, in addition to Charlie Mitchell, was the Democratic senator from Lynchburg, Virginia, Carter Glass. And you've said that he was the Senator Elizabeth Warren of his time.
He was like a racist Elizabeth Warren. Yeah.
What did you learn about human character from this?
What I learned about human character is that there's something about we all want more. I mean, I do think that that's actually, putting aside the politics of all this, did you guys ever see this movie, Wall Street 2? It's not nearly as good as Wall Street 1. You know what I'm talking about? And there's this scene with Josh Brolin. Do you know what I'm talking about? And Shia LaBeouf. And Shia LaBeouf looks at Josh Brolin and says, "What's your number?" As in, what's your number? What would financial independence look like for you? What would make you feel enough? And he looks at him and he says, "More." That's the answer, more. I think that's the lesson, actually. We're not great at controlling ourselves as a species, and so we do need guardrails. And we're in a moment right now. Arguably, we're taking some of the guardrails off. By the way, one other thing we're doing, from a disclosure perspective, is President Trump's recently announced plans for publicly traded companies to no longer announce quarterly results. So we will get results twice a year. Is that better? I would argue it's not.
Well, this is actually your expertise. The companies may have to do it anyway because the street's going to want it, right? Or do you think that they will go to the less reporting?
Oh, goodness. I think that you'll have these sort of the two official times, and then it will turn into a series of stunts throughout the year. So I think that companies will not, I think there'll be some companies that report maybe monthly, by the way. There's some people who will try to use it from a media perspective to try to get attention. Others will use it only when good things are happening. Others will use it especially when, by the way, bad things are happening. You will not hear from them for long periods of time. And there will be, by the way, arguably be more insider trading. There will be more shenanigans because we won't know what's really happening. And the people who will have access to that, there'll be a sort of certain set of elites that will get access to that information and the public will not.
The stunt idea is super interesting, and some of them doing it even more often. That's new and very interesting. So a lot of readers of my newsletter, Axios AM, are watching on the live stream, and they sent some really good questions for you. And one of my readers said, who read the book very carefully, had some very astute points about it, and he said that he felt like you were sympathetic to the bankers of the time. And I wonder if you see that, if you know why he would say that. Like, just take us inside your brain.
So, look, what I try to do, by the way, it's what I try to do with my journalism daily, but probably my whole life, and especially this book, is I try to put myself in these people's shoes. What are they thinking? Why are they thinking this? Why are they thinking something's ethical that's not? Do they think it's unethical? Do they know they're breaking the rules? What's really happening? And, when you think about the market, it's a very interesting thing. The market and stock trading unto itself is sort of a battle of wits. Just think about that for a second. So whoever is buying a stock from somebody who's selling a stock, the person buying thinks they're smarter than the person selling. And the person who's selling the stock in that moment thinks that they are smarter than the person buying the stock.
Sure.
And so when you think about all of the shenanigans that were going on during that period, meaning investment pools where people were coming together to sort of do these almost pump and dump like schemes where they would get together in groups, try to make the stock go up and get other people to sort of buy in and then pull the rug. That was not illegal at the time. There was no laws about this. There was nothing on the books. And people thought that they effectively were outwitting the other people, that it was a competition of who was smarter. And so it's not that I'm sympathetic necessarily, because I think some of this was completely immoral and unethical, but it's that the norms at the time were so different. And so I sort of have an empathy for some of these characters who I think got caught up in some of this without appreciating fully what was going on, in large part because there was nobody, including the press or politicians for the most part even, who were raising their hand saying, this is a problem.
Another humanity question, like something that I remind our journalists at Axios about all the time, and that for you and I who are privileged to be covering these times have to remember, is that these are epic times, times that will be studied for 1,000 years. To what degree did the people living in that moment recognize how big what they were living through was?
Oh, they thought that this was a monumental shift in America. There's no question that they believed that. In the same way, I think a lot of people in this room probably believe that we are all living through a monumental shift in our own country, both because of our politics and frankly because of AI. I mean, the backdrop of the 1920s is remarkable, right? We have industrialization, farmers are coming to big cities. All of a sudden you have automobiles, you have, Charles Lindbergh is doing flights. We have, as I said, telecommunications. All of it, this is a great miracle. People think that this can't end and it's going to be amazing. And by the way, it was for the most part. It just had a 10-year hiccup. More than that. I shouldn't call it a hiccup.
And what was the best thinking in that time as how long the hiccup would be, or what was it like to live in that time? Did they think that they'd fallen into a permanent crater, or how sunny, how bleak were most people?
Well, people were not as, the most interesting part is people were not actually as bleak as you would have imagined, which is to say, by the end of 1929, despite this major crash that happens in October and November, the stock market is down only about 17% for the year. The New York Times used to keep a list at the end of the year of the most important stories of the year. This was not on it.
It was Arctic exploration, right?
And so so there was, by the way, at least in some parts of the country, a sense that maybe the worst was over. The problem was, it wasn't that the market was just down 17% for the year. The problem was that so many people had taken out such large loans, and I go through it with Groucho Marx and so many other characters, that all of a sudden they're mortgaging their home, they've lost their home. I mean, it's not about the stock dropping from $50 to $20 or even from 50 to 2. It's that not only did you owe that money, you owed the fact that when you'd gone into the brokers, you had given them $1 and they had lent you $10. And so the amount of money that you owed was so enormous, and that's what became a sort of psychologically scarring situation. And then there was, on top of that, the truth is, there were a lot of headlines about it. We can talk about the data. there were, and it's in the book with Winston Churchill, there were a lot of suicides. People were killing themselves. There were headlines about it. This is not in the book. My grandfather, Sidney Sorkin, was 11 years old in October 1929. His brother was 16. His brother was an official messenger on the floor of the New York Stock Exchange, and he had brought my grandfather down there at the end of October, and they had actually watched somebody jump out a window. And my grandfather lived 91 years, and he never bought one share of stock for the rest of his life. No joke. He bought bonds, but that was it. And he thought that the stock exchange was, a place for gamblers and misfits. And by the way, interestingly, prior to 1920, that's what people did think, that the stock exchange was either for elites or for gamblers and misfits.
Did Sidney Sorkin have diary, oral histories, letters? Like, how much do you know about him?
I know a lot about him. He did not keep diaries or letters or any of this. By the way, the other thing that was interesting about just covering this period, there are some spectacular, I actually would almost love to write a companion book to this. So I tried to tell this story through all of the leaders, whether they're in Washington or Wall Street. There were so many fabulous stories that I came across in diaries and letters and memos of the common man, if you will, of what really happened to them. And for a long time, I actually tried to figure out how to integrate their stories into these stories, but it really was an upstairs-downstairs situation where there was really no way to connect what was happening. I mean, I think you will feel the depression, hopefully, in the book, but in terms of being able to tell it through, one or two or three individuals, it became sort of too complicated to actually tell that story that way.
Now, both on stage and for the New York Times and on Squawk, you interview some of those famous, consequential people in the world. Backstage, because I've watched it, you have lots of off-the-record, behind-the-scenes conversations with the most interesting, powerful people in the world. Having lived for 8 years, a century ago, has that changed what you want to ask people about it, how you ask people, how you do today's job?
I think it does insofar as I'm now more cognizant of what euphoria is like. But by the way, I think we lived it a little bit with 2007, 6, that kind of period. But I think trying to sort of understand, here we are now looking at AI. I think actually it's shifted my view, for example, of AI and the amount of leverage that's in that system, how excited we should be about it, but also maybe some of the pitfalls, the employment story. I think it's probably changed that part of it. But I would also say that actually there's also sort of a through line to all of these people. That was actually the biggest thing, which is what I realized about people. And I think I was looking for this in the characters of all of these people, is when you say what drives these people, is the same thing that drove them then that drives them now, which is insecurity. So I believe that actually the most successful people in our country, for the most part, the leaders in our country, especially the leaders in business, are driven by some hole. You talk about the more, what's enough. Everyone's trying to fill some hole. And I genuinely believe that when you look at some of these leaders, it's always about trying to figure out what is it that they're trying to prove to somebody. Maybe they're trying to prove something to their mother. Others are trying to prove something to a friend. Sometimes they're just trying to prove it to themselves, but they all have something to prove. And I think trying to understand what that is actually matters.
And one of the reasons you're the best at what you do is you have personal relationships with a lot of these people. To what degree do they realize the hole they're filling?
Oh, I think most of them know that there's a hole. They just don't know how to fill it. But by the way, I probably have the same hole. I think everyone has a hole of some sort. It's about trying to figure out what the hole is. And some people are more content than others. There's a character in this book named Jesse Livermore who had a very big hole in his heart. Jesse Livermore was a short seller, and he was an emotional wreck of a human. The truth is, he was somebody who was betting against the market, was very successful, and then had a really tough time. Ended up making $100 million in the middle of the crash. Ended up losing it 3 years later, making it back, losing it, making it back. And in 1940, he walks into the Sherry Netherland on Fifth Avenue, and he shoots himself. And so I think there's a lot of humanity in all of these stories.
So you're a very involved father, and you write very touchingly about your kids in the book. And I've always thought if you
They
give
just
your
wanted the book to be finished the whole time.
if you give your kid confidence, it makes up for everything. But listening to you, insecurity also can be a predictor of
Oh,
success.
yes. No, I am convinced that there's a sort of healthy/unhealthy sense of insecurity, right? I think when you look at a lot of successful people, they're all trying to get to the top of the mountain. And then what's so interesting is then they want to stay there, right? It's not that I want to get to the top of the mountain and then I'm happy to ski down. Most people don't do that. They want to get to the top of the mountain and then they either want to climb the next mountain or they want to make sure that they don't lose their spot. And why is that? What is that about? A lot of these people have extraordinary amounts of money. There's something else going on. And so I think I spent a lot of time, both in terms of my day-to-day journalism now thinking about that, but I spent a lot of time trying to understand, what was the chip on Charlie Mitchell's shoulder? What was the chip on Carter Glass's shoulder? What was the chip on Jesse's shoulder? I mean, I think that was, and I think trying to understand that then unpacks a little bit of it so that when you see them make these decisions, whether you think that they're good decisions or bad decisions, you might say to yourself, I get it.
Your point about more is actually quite profound. What was the light bulb moment or the aha moment for you that, like more, euphoria, insecurity, are those the three things that drive us?
I'm not a psychiatrist. I don't know. I think I've been blessed to spend an extraordinary time reporting on extraordinary people, and when you spend time with them and really try to get at what's underneath all of this, I think that those are three qualities that are pretty. They're pretty almost standard issue qualities. But the insecurity piece, I know that may sound counterintuitive. I think it's actually that's the single thing.
And as true in politics as in business, for sure.
Totally.
And in journalism, for sure.
Sure.
One of the surprises about this book, you spent 8 years on it. For 7 years, you shared on the set of Squawk Box. You kept it a secret from your two co-anchors. Why?
I didn't tell a lot of people about this book for most of the time I was working on it because the truth was I was scared that I didn't know if it would work, and I didn't know if I would get there. The first sort of 4 or 5 years I was doing it, it was like a personal project that I told almost nobody about because I had no idea whether I was worried the archivist was going to be right. That I wasn't.
Have you seen the book?
I believe she has. I think we sent them a couple of copies, but I don't know the answer to that. I know we sent them copies. I don't know if she's read it. So I didn't, and then the other thing is, Joe and Becky. Joe can't keep a secret. And so I felt like then he'd be asking me about the book every day on TV. It'd make me even more, self-conscious than I already am.
He definitely would want to boost you and do all he could to be helpful. So your
He told me he was going to write a book called 1928.
That is funny. You're co-creator of Billions, and this is sure to be a show. You're already being approached about making it a show. Perhaps industry meets Gilded Age, is how our friend Paul Needham put it.
Oh, that's actually, I like that. I'll call my agent and tell him to use that.
A question Ben I had, you've had success on the big screen. How did that affect the writing process here? How does this affect your characters, your scenes? That this is probably going to sell. Certainly you want it to sell. How does that affect the writing of the book?
I don't think I thought about it like that at all. I don't think when I was writing the book, I have no idea whether this will really sell or get made. I mean, maybe I think that hopefully somebody will buy it and say they want to make it, but then you never know whether it actually is going to happen. And it's a total, lark. But I was trying to write it. I wasn't trying to do that. I was trying to write, as I said, the books that I loved were The Barbarians at the Gate, things that Michael Lewis wrote, Den of Thieves. These were sort of fabulous books to me. There was a book by Kurt Eichenwald called The Informant, which puts you in the room in the most magnificent way. And I always thought if I could just do that, whether it's sold as a film or not, was almost besides the point. I will say, interestingly, the experience of working on Billions and thinking and talking about character And those are fictional characters. I know a lot of people think they're real people, but they're fictional characters. And we used to talk about what's driving them. What are their motives? What are their incentives? I do think that that weighed on me as I was thinking about these characters in terms of what information I needed to try to excavate from the archives to prove who they were. So I do think I spent a lot of time, as I said, trying to understand their childhood and their history and what that chip was, and trying to figure out how to explain what that is so that when other things happen later, you have this sort of different understanding of them on a human level.
Where are we as a country right now on the euphoria scale?
Pretty high. 1 out of 10, I think we're close to 10. 9.5? What do you think?
And how...
You're not answering?
No.
What do you think?
No, I agree 100%.
Well, euphoria on the economic side, because I know other people politically, who think we're like a
no, but talking on the
something.
economic side, if you own assets, you think we're in a golden age. That's the big split. Do you own assets or don't you?
Does the Sorkin family own assets? Like, actually, someone asked me the other day, did we sell all of our stocks before publishing this book? The answer is no, and I had no insider information. So no, we did not do that. Though, by the way, oddly enough, the stock market has dropped in the past 2 weeks. I don't think it's a coincidence. No, I'm joking.
But the New York Times bestseller list is booming. How did you mentioned
people to make a lot of money so they can buy a lot of books?
You mentioned that what you learned here changed how you think about AI. Do tell.
So I think these days, as I'm super excited about AI in the same way that I think people were super excited about RCA back in the day. And so I think, to me, and that's why I wouldn't compare today in a way to 1929. I might compare it to 1999. So I actually spoke to Paul Tudor Jones recently, and Paul Tudor Jones is a legendary investor, and he said he thought that we were, and I sort of agree with him, maybe something like October of 1999. So you might say, oh my goodness, I should sell all my stocks immediately. But that's not really the lesson, because the truth is the stock market went up 40% from October of 1999. By the way, if you go back to draw a parallel back to this book, Charles Merrill from Merrill Lynch, 1928, told everybody to get out of the stock market. This was a terrible idea. Was Charles Merrill brilliant? I don't know. And the reason I say I don't know, from the beginning of 1928 to September of 1929, the stock market went up by 90%. And so you can be a Cassandra in the room, but you have to be right about the timing, and that's very hard.
Do we know if he took his own advice?
That's a great question. I think that he did take a lot of his own advice, but the truth was he owned Merrill Lynch, and so he had a good asset.
So I have one more question, and then we'd love to bring you into the conversation. So get ready, but we're going to zoom out a little bit and use your unique expertise about the business world. My nephew, Ben New Stratton, who's a very entrepreneurial guy just out of Chapman College. He's living the dream in Manhattan. And he says, I'm curious if AI and new fintech will level the playing field for ordinary investors or help the pros get further ahead. He says, especially as someone who doesn't have as much time to learn or put capital in the game as I want to, I'd like to maximize my edge.
It should level things to some degree because everyone will have more information. So arguably, over the past decade, 2 decades, we all now have more information. We all can get that information in our pocket on our phone. By the way, I mean, from a technological perspective, we are in such a better place than 1929. You know, when people look, I don't know, I don't think I even appreciated this before I started working on this book. When people look at those famous pictures of, thousands of people in the street, right around the New York Stock Exchange from you'd see like on the day of the crash, these pictures that are everywhere, and you see thousands of people in the street, you don't know what they're doing. The reason they're there is because they are trying to find out what's happening to their money, meaning they couldn't actually find out. So here we are with our phones, and we can know exactly what's happening. The stock ticker inside the exchange was oftentimes 5 or 6 or 7 hours behind. And if you were behind from what was actually happening, so if you were effectively trying to place a bet, buy or sell your stock, you were looking at numbers. It would be, I think I said it in the book, it would be like you'd be in the 8th inning looking at, the score of the game in the 3rd inning and having to decide what you were going to do. And if you went to a brokerage, even uptown, you were oftentimes like a day out of time. So I only say that because here we are in a moment now where AI, I do think, is going to probably help level things more. I think technology has generally leveled things more. But at the same time, of course, Wall Street has always been very clever and very smart about how to get to the next place. So most of us at the moment don't have access to satellite information so that we can see how many cars are parked in parking lots at Walmarts. A lot of hedge funds have that data every single day, and they pay for that information. Citadel pays to have its computers physically closer to the stock exchange. This is like actually, again, people going down.
This was a Michael Lewis book.
It's a Michael Lewis book, so that they could actually get an edge. I do think that they will always try to some degree to get an edge. And by the way, talking about an edge, I noticed just for the first time that this gentleman here, talking about an edge, is wearing an Axe Capital T-shirt from Billions. So thank you, sir. That's really great.
All right, we've got a microphone here.
Bobby would be proud.
Step right up. Please say who you are and where you're from.
My name is Eli. I live in the D.C. area. I'm a student at American University. So you said that there's some commonalities between either right before the Great Recession a little over a decade ago, then the Great Depression, which your book talks about. Is there anything that we can do, well, not necessarily we, but like the country can do to avoid those same mistakes that was made back then? We obviously don't have tariffs and everything, but like from the markets at least, since the...
Look, I'm of the view you just need more. Again, I think transparency is king. So anytime there's an effort to take away transparency, that's a problem. And I think, by the way, as I was relating to the idea that we're going to have, as I said, crypto and private equity and venture and all of these other things in the retail market without those same disclosures, that to me unto itself presents a problem. And anytime you're trying to take a guardrail down, I mean, we are in a deregulatory universe right now. And by the way, there's some things that might, have a good reason for that. But I just think we need to be super careful about taking the guardrails down, because the truth is the guardrails, which went up in 1934, and then we had the Bank Act in 1940, we had bank capital requirements, all sorts of things that we put in place. The truth is that has actually helped us remarkably over the past century. And I would give a lot of those rules some credit.
Thank you.
Thank you.
And we're going to be super smart brevity
Sorry.
with our questions so we can get
We have like a lot of questions.
Yep.
We're going to, oh my goodness, and I see my friend Eric Dash back there. I see a lot of friends. This is fabulous. We'll go very quick.
All right,
Sir.
I'll cut to the chase.
Cut to the chase.
Leverage was a big word in your
Huge.
earlier part of your thing here, in both
Yes.
29 as well as today, it seemed like you were saying. My question is whether the sort of the outlook and the timeline of the folks who were lending money, the banks, in 29 compared to the time horizon of the people who are lending money for AI and other things now. How does that compare? Does that make a big difference? I have an impression, I guess, that in 29, people were looking for their money back sooner than
Right.
they are necessarily looking for their money back now. Is that true or not true?
Well, so today I would say the biggest thing, that's happening in terms of leverage in the AI space is there's two issues. Again, this one goes back to the transparency. A lot of loans post-2008 that are made in America to corporations are not inside the banks anymore. It's in the private credit world.
Right.
As a result, we don't have the same kind of disclosure. One of the things that's happening, we just saw a deal like this week. So Meta just did a deal with a company called Blue Owl, and to finance, they're building this gigantic data center down in Louisiana. I think it's like 1,700 football fields, and it's
Right.
extraordinary. The way the deal is set up is effectively that Meta is locked in only for 4 years at a shot. So it's a little WeWork-ish. So you have short-term leases and long-term liabilities. So Blue Owl is on the hook for this big data center, and Meta is technically only on the hook really for 4 years. They've effectively guaranteed close to 16, or at least a certain amount of money over 16 years. But the point is, you're going to have all those data centers. You're going to have to depreciate those data centers and the chips in them and everything else. And the question is if in 4 years some of these tech companies, and you could take Meta out of it because that's one of the bigger ones, but some of the startups and others that are paying for this, effectively these short-term leases, if they can't make good and pay,
Have profits?
or have profits because they're going to need money to pay, the people who are financing all this stuff are going to be on the hook, and that could pose a problem. That's why I'm not sure when all of this becomes a problem. By the way,
Compared to 29?
well, 29 was 29 was a very different story. 29, it was about margin loans for the most part, and about individuals who were taking on extraordinary debt. One last thing, and I know we have a million questions, so this is unfair. The other piece that didn't exist in 1929 was government debt and the risk that that presents. So we have extraordinary amounts of debt in this country today. There was a budget surplus in 1929. We haven't had a budget surplus, obviously.
Clinton.
Excuse me? Since Clinton. No, I wasn't going to say since 1929, but since Clinton. But nonetheless, it's a completely different scenario. And so the amount of debt we have, if you layer that on top of this, it could create its own bigger problem later. Anyway, thank you, sir.
Thank you.
Sorry.
Hi, in defiance of capitalist and even Republican orthodoxy, there seems to be a movement towards state-sponsored capitalism.
State-sponsored capitalism. Yes.
Government investing in Intel, and today we hear about the new fancy computer thing, asking for the government to invest and getting. So, what do you think this portends for the future?
Ooh, that's a tough question. I'm actually curious what you think it portends for the future. Look, I'm not a fan of it, generally speaking, but I don't know what it portends for the future. I imagine when all is said and done, this country is going to have some kind of sovereign wealth fund that'll be super leveraged, and we, as the United States, will own small pieces of lots of different businesses. And I have great misgivings about that, but I have a much longer answer for that than I can give you right now. My great friend Kayla Tausche is coming to the microphone.
Hello. Full disclosure for the live streamers, I worked with Andrew for 12 years, but I have a journalistic question for
Go
you,
for
which is your sources for Too Big to Fail were living,
Yes.
many of which are still alive. Your sources for 1929
Dead.
are dead.
Yeah.
Did that give you editorial freedom and not worrying about what you would write about them?
Not really.
Really?
It's a yes.
No, I think, so I'll give you a great example. And if you guys, I don't know if there's anybody here who reads endnotes. Some people may not be into endnotes. And as I was doing the work, doing the research, I found this, what I thought was a fabulous letter from Thomas Lamont's wife to him, 1926. She writes to him effectively accusing him of all sorts of affairs with all sorts of women, as if he has sort of a girl at every port, and he's traveling all over the world and all sorts of things. And it's an amazing letter. And in the archives is a index card from his daughter, or maybe it was the granddaughter, saying that this letter was a family joke. Okay? And as I'm reading that, I'm thinking to myself, is the letter real? Is the letter a joke? Is it not a joke? Is she writing, is the index card a way to protect her parents? What's really happening here? So there's part of me as a storyteller that desperately wanted to include the letter in the story, like in the actual story of the book. And I ultimately decided I wasn't going to do it because I wasn't sure. And so you asked about sort of like how I thought.
That's cool.
You were worried about the estate coming after you?
The estate's long gone, though interestingly, Ted Lamont, who's the governor of Connecticut? Ned Lamont. Ned Lamont was related to Thomas Lamont. So I wasn't worried about the estate, but I was worried about making sure it was right. So anyway, if you do read the endnotes, you will see the letter, and you will see this weird note with the daughter, and I try to explain all of that. But I do think I spent an extraordinary amount of time actually trying to make sure that every little thing was as fair as if they were alive or dead. It didn't matter.
Great question. Now that's behind the curtain. Sir.
Sorry.
Hi, I'm 60% long. Ives and Erdy today. What should I do? That's not
Say that again. You're 60%.
That's not my question. Okay.
I only play a financial expert on TV.
What lessons from writing your book do you think we could apply today in the economy and the stock market?
Humility. One-word answer. That's it.
Wow. Okay. A word about AI. I have several software engineers in Germany actually optimizing indicator for entries and exits for short-term trading, and we're getting good results. So.
Interesting. Yes, sir.
Hello, Andrew. Speaking of debt, J.P. Morgan analysts have recently coined this phrase debasement trade.
I've heard about it, but I don't know the full extent of it. But
It's
tell me
like
more.
gold and
Right.
silver and going into hard assets.
Yes.
Was there a similar movement towards those types of assets
Yes,
during this time frame?
to the point.
And how effective was it?
To the point, interestingly, that Bernard Baruch, who was a famous financier, actually was buying his own gold mine. So yes, some people were trying to buy gold, and this guy was trying to buy a mine. I think Andrew Mellon might have had a mine as well, and he was the Treasury Secretary. So yes, there was a whole effort afoot for some people to go long gold during this.
Was it effective?
For them, it was effective. I think.
What's the likelihood that we're in an AI bubble and then we'll have...
100%. How could we not be?
Just explain.
Well, look, as I said, I think that AI will be an amazing thing, hopefully, for our lives in some amazing way, though I do worry about the employment picture in a big, big way. But invariably, right now, there is indiscriminate spending going on, right? The hundreds of billions of dollars that are pouring into AI, that are pouring throughout our economy, there is a level that's indiscriminate. There's a level of it that's almost religious. If you really were to talk to the leaders of the biggest tech companies right now that are doing this investing, you said, what is the true ROI? Can you actually math out how this really works? If you gave them truth serum, they would tell you that there is no spreadsheet that explains it. What they would tell you is that they are so scared of being left behind, that this whole thing is moving so fast that they would prefer to be wrong on one end of it, meaning to have spent too much than to have spent too little. And that is a bit of a scary recipe.
Super interesting, sir.
Thanks for being here. You mentioned guardrails in place. Some argue that overregulation or having guardrails can squeeze out Main Street from the same opportunities as some of the wealthy. So do you think there's a healthy balance to provide Main Street the same opportunities as those that
Right,
have
so
them?
for example, I am a big fan. I think ultimately we actually should have potentially private equity and venture capital and all of these kinds of instruments inside our retail and retirement plans. I'm not against that. I just think if you're going to do it, it has to have all of the disclosures that would typically come with a public company, for example. One of the things to watch for, by the way, if you're interested in these new instruments that are coming our way, is that a lot of them are called semi-liquid instruments. So they are sold to you as if they look like a stock. You can buy them on any day, but they effectively own hard assets. So if it's a private equity fund, would own they'd own a hospital, they'd own a building, they'd own a company. They're called semi-liquid because if you want to sell the stock, if more than 5% of the shareholders try to sell in one quarter at one time, they can say, excuse me, we're putting up some gates, and you're going to have to wait your turn to get your money back. And so there's a lot of, and by the way, we saw this actually happen there's a number of instruments like this in the real estate space in 2022 that got in trouble, and those gates went up. And we're about to do that en masse over the next decade. So I think there's just a whole bunch of interesting things. By the way, every time you get a new product, the charlatans and the frauds emerge. Do you remember when in 2020, SPACs, these blank check companies, were everywhere, and everyone said this is like our lottery ticket. And I was cautioning everybody. Interestingly, when I was cautioning people, and maybe I was being too paternalistic, they would say, I'd get emails and texts and tweets and all sorts of things, and they'd say, Andrew, stop trying to protect us. We want the opportunity. You're actually not protecting us. You're protecting the man. It's actually a very interesting sort of philosophical case about sort of what the role of journalists is supposed to be, and frankly, what the role of government should be in terms of how paternalistic we should be. Should we just let it all run loose? I think we have to be a little bit more careful than that, but that's one man's race.
I'd say your view of that aged well.
Hi, my name is Mohammed. Thanks for being here. My question is, given your interactions with business leaders in Wall Street and leaders in DC, do you feel optimistic that we'll have the leadership that would, make the necessary decisions to protect the system like they did in the 1930s?
So, yes and no, and I'll just walk through a little bit of thinking. I was actually surprised at how well we handled the economic impact of the pandemic, oddly enough. And if you really go and think about that, you know, we had bailouts in 2008, and this whole country went out of their minds and thought that the bailouts were terrible, they were unfair, we were, you know, rewarding the arsonists, all of that. Occupy Wall Street. I would argue to you that on an economic level, the way we did the bailouts was actually effective, practical, and quite smart. Politically, it was terrible. So I was very surprised that the pandemic happens, and all of a sudden we're giving money to almost everybody. We're bailing out airlines. We're doing all sorts of things, and actually nobody was screaming from the rooftops. Everybody was like, okay, send me the free money. I want the free money. Airlines, you want the money? Have the money. I think it really depends maybe who's in office, who's around the hoop, if you will. I think Stephen Mnuchin did a good, what'd you say?
And what the crisis would be.
And what the crisis would be,
Yeah.
and what the politics of that crisis ultimately look like. Who's responsible for the crisis? Interestingly, by the way, in 1929, most people, and this is something we do not do anymore, blamed themselves. So, you know, in 2008, it was the bankers' fault for selling everybody the mortgage that they couldn't afford. They were duped into buying the mortgage. It was very rare in 1929 for, you know, Groucho Marx actually is quoted in the book saying, "I shouldn't have trusted you." And he blamed himself for what happened. And I think that's actually a very interesting sort of, I don't know if it's a development or a different way of thinking, but that I think also has a huge impact in terms of, you know, how we, you know, who's going to point the finger.
Thank you.
If we all promise not to tell,
Yeah.
would you share with us what your next book project is?
My wife told me that I'm not allowed to write another book until my children go to college.
How many years is that?
Well, you might have to wait. So I have two 15-year-old boys. That could be soon, but I have an 8-year-old daughter who's fantastic. So it may take a while or some convincing. Hopefully convincing, but we'll see.
A final question, and then we have a quick lightning round. So this is a question for you from Mark Leibovich, your former
Oh, yes, I love
colleague
Mark.
at the New York
Our
Times,
town.
friend of lots of people in this room, now at The Atlantic, and author of Our Town. And he says, since company enclaves of wealth and power like DC and Wall Street are essentially small towns,
Right.
how have you seen the small town of Wall Street evolve since you've been covering?
Oh, goodness. I would actually say, and here we are in Washington, the biggest shift. I started as what I would describe as a classic business reporter. I was covering deals in Wall Street and mergers and things, and this is in the late 90s and early aughts. And all of those people were very clustered around their own sector and their own industry. Today, and I think it's really actually a function of the crisis in 2008, and you now cover them in a different way too. I think every business leader thinks that they are a politician. They have a big political role. They spend extraordinary amounts of time in Washington, oftentimes now lobbying for all sorts of different policy issues. And every politician who I think didn't actually pay attention to business that much, oddly enough, thinks they're in business. And so I think there's a sort of very interesting overlap, and I think that is something that's emerged really over the past decade and a half, but I do think that the crisis was sort of a central point in that. I don't know if you have a perspective on that.
I agree, but I'm not going to waste our lightning round
on
my perspective. Lightning round questions. These are from Chris Kruger, who's a regular on CNBC. What time do you go to bed?
Not early enough. I'd like to be in bed by 9:30. That would be ideal. It oftentimes creeps to 10. And I like to be up by about 4:30, 4:25.
What's the biggest thing that you've learned by wearing an Oura ring?
That I don't sleep enough.
So do the math. How many hours is that?
I can I can get 6. I'm 6 is good. 7 is better. It's hard to get it. I'm not doing well on my Oura ring score today. It's very, very low. But I
You
will.
drove from Richmond to here.
Well, I
and
will
did
tell you,
your
by the way,
show.
I know I'm always talking about the Oura Ring on TV. The other thing I'll sell you, and I don't have an affiliate link or as an influencer deal or anything, is if you care about your sleep, the 8 Sleep mattress cover. Do you know about this?
It's very big in Silicon Valley.
Silicon Valley. It changed. I know this has changed my life and might have saved my marriage. It changes temperature while you're sleeping.
And you can have a different temperature.
My
than
wife
Polar.
runs her side like it's a meat locker, and I have my side is a little warmer. But you will never wake up sweating. You actually get deeper sleep and longer sleep. I actually look at the ring. You can see the data. And for those of us who only can get a limited amount of sleep, if you can get better sleep, it's a great thing. And I'm going to ask them for a commission when this is over.
First 3 things you read in the morning.
I usually under the covers. My first thing, it's under the covers because I don't want to wake up my wife. Okay, is I first hit just my emails, and it's usually I'm doing DealBook stuff because DealBook has to go out in the morning. And so
in London.
And part of my team is in London, so they've been trying to fix the mess that I've usually made before I've gone to sleep. And so I'm usually reading that and texting and slacking and that kind of thing. I'm, of course, waiting for the Axios newsletter to emerge right before our show begins.
Part of a good breakfast.
Always part of a good breakfast. And what else am I looking at? I am addicted, unfortunately, to X and to Instagram. I will admit those things. But I mean, and then I would say I read all the papers. I mean, that's what I'm. If you're talking about like actual work, but I do flip at the other stuff first.
How much coffee?
Always at least 2. Always 2 cups. By Friday, 3 cups.
Do you write longhand or on computer?
I always write on a computer. I have terrible handwriting. Looks like a 3rd grader with a broken finger. And I will say the one thing that I do, and I talk to a lot of writers about this that might be slightly different than others. I think there's a lot of writers who think that they can, put all their ideas down on a page and then edit it and fix it afterwards. I am not like that. I can't really do the second sentence until I'm happy with the first sentence because I am convinced I can only upgrade my work by 1 letter grade. So if it goes down on the page as a B, I can get it to an A. If it goes down on the page as a C, it will never get it'll never become better than a B unless I start over.
What are the chances that when your daughter is in college or out of college, whatever the metric was, that your next book is about the 1987 Black Monday?
I think there's some good books that have already been written on that, so I don't know.
And very last question, what's on your bucket list? What would you love to do that you haven't done?
Rest.
Thank Lissa and Brad for Politics and Prose. Thank all of you for coming out. Andrew Ross Sorkin, congrats on 1929.
So Andrew is on a very